Savings, gold versus a banking account. Proof that banks are robbing your savings and your money. Hey gang, this is Mike with MrNoFluff.com. I'm going to tell you what's going on if you had money invested today in gold versus into a banking account, let's say Bank of America. And I'm going to show you what's going on with the interest rates, with negative mortgages, and why I say it is so crazy to keep money at the banks, because not only is bail-ins are going to happen, but I'm going to show you right now the numbers, the proof that if you had money in your banking account, you'll be losing versus if you had money in gold. So let's dive in without any further delay. Okay. So what's going to happen is I am going to draw a line here, and this is going to be your gold, and this is going to be your savings. Okay, and we're going to use Bank of America, but you can use any other banks out there. Okay, the reason I chose Bank of America is because before I was naive, before I was full, and I wasn't awoke, I used Bank of America, and I just want to show you my experience with them, in a sense of, because I had experience with these companies versus other companies. Okay, so that said, let's start in. So imagine if you had a minimum of $5,500, okay, and you had invested in gold, and if you versus having $5,500 in your savings account. Okay, and the year we're going to start off with this is 2006. So in 2006, okay, gold was $1,100 per ounce, about. And if you had invested 5,500, okay, dollars, you would have got 5 ounces of gold. Okay. Now in 2019, the price of gold is over $1,500. But for the sake of this example, because it goes up and down, I'm just going to use $1,500. But at this time I'm doing this video, the price of gold is $1,554. Okay, so I made a mistake here. So gold since 2016 has gone up from $1,100 to $1,500 plus. So if you had the same amount of money invested into gold, okay, you still would have the 5 ounces of gold. But what would be the difference is that now your 5 ounces of gold times $1,500 will now give you a $7,500 return. Okay. So once again, what I did is I put my money into gold versus banking account. In 2016, the price was $1,100. So if I had $5,000 for this example, if anyone else in America had $5,500, they had put it into gold, the numbers will fold as following. Okay, not financial advice. That they would have 5 ounces of gold. Today, that 5 ounces of gold is worth $7,500. So that equates to a positive $2,000. Okay, positive. So now let's look at what we want to look at now is your banking account savings. Okay, all right. So again, if I had my money into a banking account, once again, I had 5,500 to make everything even in a bank savings. All right. But what I should do is actually start with the year. So it'll be much more logical. So 2016, guys, I'm just freestyling this. I'm not scripted. So this is where it is. So in 2016, if I had 5,500 in a savings, bank savings, two things would happen. I'm going to give you the best case scenario, and then I'm also going to give you the worst case scenario. The worst case scenario is what normally what happens throughout many banks in America. So most people that have money in their banking accounts, this is what's going to happen to them. Okay, and I'll show you best case and the normal case scenario. Okay, which I call the worst case because that's really the truth. That's what's happening. So if I had $5,500 in my banking account. Okay, the interest rate that banks are currently paying, let's go to Bank of America real quick. I just Googled it real quick, is Bank of America in a savings account, they're paying you 0.003 which really translates to 0.00 to 0.0003%. Okay, so what that means is that they're paying us in an interest rate of 0.03%. Okay, rate of return. So if I had my money in a banking account in 2016, they were going to give me 0.003, which basically equals to $1.65 a year that I would earn in interest earned. Okay, so that's it. Now in 2019, okay, I had, how much would I have in my banking account? Well, let's do the numbers. The interest rate is still going to be the same, if not even worse, because they're bringing the numbers down. Okay, so what I would do is I would just multiply 1.6 times the 3 years, which now brings it to $4.95. Okay, this is exactly, instead of per years, is the 3 years: 2016, 2017, 2018, 2019. Okay, so I would be getting $4.95. So how much would this be? So I would take my original principal, 5,500, and I would add $4.95 to it, and I would be having 5,595 and $4.95. That's how much I would be getting. This is the best case scenario if I had put my money into the bank, guys. If I put it into Bank of America, this is what I would be getting as best case scenario. But here's the catch. This is what's happening to most people. This is not what's getting, because if I had put my money into gold, I would have made $7,000, 500. Here I just made only $4.95. Okay, that's all I made by keeping my money from 2016, 2019 in the bank. The same exact amount. The money I had in the bank was always the same, 5,000, or I should say the money I put into my savings versus putting money into my savings in gold was always the same, constant, 5,500. The difference is that I made in $2,000 positive just by parking my money into gold, where if I kept it in the bank, I would have only got $4.95 theoretically. But that's the normal case scenario. That's the best case scenario, which really is 100% wrong, because I'll explain what it is. Most people are not getting this. What's happening to most people is this. Okay, so let's go back in 2016. They park $5,500 into their banking account. Okay, and again, they're paying 0.03 percentage, actually less than that, in interest rates. And so what's happening is the numbers look the same. So I would be getting $1.65 return. Okay, and but here's the thing. Here's the catch. Please pay attention. The bank will, if I put $5,500 in the bank will in a yearly give me $1.65. But the catch is right here, ladies and gentlemen. Please make sure you understand this part, because most banks, if you have less than a certain amount in the bank, they're going to charge you with all these kind of fees. Now they have all kinds of fees. They got to have bank statement fees, minimum balance fees, insufficient funds, but all kinds. Let's assume you have positive and there's no insufficient funds, but they're going to come with some kind of fee. So normally what happens is, in a lot of banks, is if you have $10,000 or less, okay, they're going to charge you a fee. In a Bank of America, they're going to charge you at least $25 a month with all the different fees they have. Okay, so they're going to charge me a month. So basically, when I put my money into a bank, the very first year, okay, this is a month. Let me clean this up a little bit. Then I got to minus the bank fee, which is $25 a month, which equals to $300 a year. All right. So I don't know if you guys just caught this. The bank's going to give me $1.65, but they're going to charge me $25 a month. So in reality, they're taking money from me. Okay, so check this out. Now, in 2019, my same principal, 5,500, with the same interest rate, okay, I would be getting $4.95, okay? But now I have to subtract it from $300 a year by having this banking account because the bank's going to charge me, and I got to multiply by 3 years, okay? So now I have to subtract $900 for my bank fees. Okay, they're going to have all kinds. Again, they're going to be bank statements. They're going to be minimum balance. And again, in this equation, if you put only $5,500 into your banking account, then what the fees will occur. Okay, now if you had 100K, there probably wouldn't be fees, but some banks still charge you fees. It depends on the amount of transaction, etc. But just to make it, for heaven's sake, somewhat easy for everyone to understand, okay, that if I had put my money into a bank, 5,500, they would only for 3 years give me $4.95 in interest, but they will be subtracting my banking account $900. So the numbers will look like this. My principal would be 5,500. I would have got an interest rate of $4.95, which is a positive. That brings it to $5,504.95. But now the banks are going to hit me up with a $900 banking fee because it's just $25 a month times 12, which brings it to $300 times 3. So $300 times 3 equals $900 in bank fees. And remember, I wasn't negative. I didn't withdraw. There's not any sufficient funds. This is just a hypothetical example. If you had 5,500 bucks and you put it in a bank, and you didn't go negatives, you didn't even spend your money, you didn't even use that banking account, you just left it in there. Okay. Now what you will be getting is, check this out, guys, and this is what the robbery is. After the 3 years, what you would have in your bank account is $4,604.95. So you originally started with guys, you originally started with, I should put that in actually green because you originally started with positive, and now after the end of the day, after 3 years, you're leaving your money in the bank, allowing the banks to use it to do fractional reserve, to lend it out, all the stuff. You're really walking out with 4,690. I'm sorry, 4,600 and some change. Okay, now if you look at that versus the gold scenario, the same exact money I put into gold. I didn't allow the bankers to put their dirty hands on it. And in that 3 years, my money went up 7,500. Okay. I put in 5,500 and it went up $7,500. So a positive $2,000. But if I had put my money into a Bank of America after after the 3 years, 2016, I put my money in 2016 to the bank, 5,500. In 2019, I would only have 4,600. See, do you see why I don't like stinky bankers? Do you see why I don't trust bankers? And many people don't take the time to just to follow what's going on in the financial sectors. They don't understand how the money is printed. They don't understand, Federal Reserve. They don't understand how the banks rob them. But this is a very, very simple. If you're a working class American or you're a middle class American, and you probably have some kind of that amount in your banking account, then notice that every year they're subtracting money. Now, from your account. Now, there can be situations where, your bank may not have a minimum balance fee or your bank will not have any kind of fees. But majority of the banks that I've seen today, they've gone away from free banking and now they're hunting down for your money. So if you would have put 5,500 bucks into a Bank of America and didn't touch your banking account, didn't even use a debit card and let 3 years go by, you would go and look at your money. There's only $4,600 instead of going up versus like gold. Okay. Now here's the catch 22. This is just one way you lose. There's many other ways you lose. You're losing another way because of cost of goods, thanks to the big brother Trump tariffs. Cost of goods have gone up. Okay, because of tariffs. Another way you're losing money is that your purchasing power is getting less and less because, again, Federal Reserve is printing massive amount of money and they're giving 0% interest rates almost, which makes the cost of living high and higher. So as you can just see from this equation, you've lost multiple ways. You lost the amount you put in your banking account because the dirty, stinky bankers stick their hands and pull out your money. You lost because of products that are now made in China are now going in price. You have lost because of Federal Reserve printing of money, which now your buying power has gone less. Not only if you left that $5,500 into your bank account, that 5,500 may bought 1,000 items. Today, that you don't even have that 5,500. You have 4,600, but your 4,600, assuming if it was still 5,500, would now only buy 800 items. Okay, so you lost multiple ways because you don't have the 5,500, you have 4,600, and then by inflation, you even lost more. Now, how did the banks win? Well, guys, they created this massive mess, and guess what? We bailed them out last time, and we're bailing them out this time because they're too big to fail. How did the banks win in this situation? Well, guess what? They provided printed money, and they made everyone in America work for it, and they charge interest on it. They've got majority of American governments, big corporations in debt. We have zombie corporations walking around. They're not profitable. We have ultra high debts in civilians and corporations and federal and the state. And how are they making away? The same way they made off last time. They stole people's homes through the foreclosure, even though that they got their insurance, the PMI insurance, they collect the PMI insurance, they still foreclosed on their home. They got double earnings, and worst case, we came and bailed them out. So how did the rich win? They rob us in all directions. They rob us from sticking their hands into your savings and robbing you with bogus fees and no interest. They rob you from printing money. They rob you by creating money through fractional reserve lending. And that's what's going on. That's why in 2016 I said, I'm out of the banking sector. I'm out of the real estate because these assets, these debts cannot continue going further and further and further. There's almost so much more they can do before there is civil unrest. Or there has to be massive hurt, what's called the greatest depression coming to not only America, Germany, Italy, Great Britain, Canada, Australia. You already see a lot of the European countries already in a recession. Some of them already have pulled out negative bonds. They pulled out negative interest rate. And this is why I say, fuck a stinky banker, fuck the Federal Reserve. And guess what, guys? I don't buy that stuff. I don't believe in the FICO score. I don't believe in the bankers. I don't believe in being a good slave to the banker. Civil obedience, which means that I choose where I put my money. That's why I'm a big on gold. I'm big on cryptocurrencies. And I just told you guys in 2016, gold was the play, and my predictions are here today. I told you guys in 2016, the shit's gonna pop, and it's gonna be crazy. Here it is today. Today, this month, September, last month I should say, new home sales are down 12%, guys, nationally. 12%. That's big numbers, guys. A year ago, people were overbidding on real estate. The real estate agent was telling the buyer, dude, you gotta pay more than the asking price. Pay $10,000, $20,000 above the asking price. And now most of these homeowners that bought homes in the last 5 years are going to be majorly upside down. They're going to have negative equity, which creates a great opportunity for myself and other investors out there that have the cash or have the knowledge how to fund deals without borrowing money from a bank. So if you're interested in learning how to fund your deals without borrowing from the bank, you should definitely join me at my profit sharing coaching at MrNoFluff.com. Again, MrNoFluff.com for just $30 a meeting, right? $119 a month. You can learn how to fund your deals, how to find these motivated sellers because hallelujah, subject to heaven is here, guys. Subject to heaven is here. And so many people are going to get killed and have already got killed by having their money into a bank, and the bank's been just not giving them any interest rate, bleeding them one way or another to bank fees, if it could be minimal bank balances, if it could be statement fees, whatever they can fucking pull up to calm people, sucking their money dry by not giving them shit, and then going out there and gambling with our savings, with our money markets, with our CDs into derivatives that I showed you just yesterday, proof that no one's going to show you on TV that derivatives are going to be crashing like crazy, and there's nothing we can do about it, guys. derivative numbers, the numbers are so bigger than all the money in the world, all the gold in the world, all the cryptocurrencies in the world, all the silver in the world, the most richest people in the world, the most richest companies in the world, all the currencies in the global world, Russia, China, all put together, derivatives just overcome them like little zits on someone's face, okay? And guess what? A great opportunity. That's why I brought you guys Warren Buffett, like myself, is liquidating and having cash ready to buy, because in this economy crash is a great opportunity to make a lot of money. Now, a lot of people are going to get hurt. I'm so sorry about that. But by they listen to central bankers and they listen to financial advisors, and great for them, right? But I'm sorry that they're going to get hurt. But whoever's going to win is going to be the one percenters and anyone that's smart enough to realize this is a great opportunity to get into buying businesses at deep discount, buying real estate at deep discount, buying stocks at deep discount. A lot of assets are going to be at a deep discount, but not gold and silver, guys. Not gold and silver. All right, guys. If you're interested in meeting with me every Saturday in my group, then go to mrnofluff.com. $119 a month gets you one-on-one coaching in a small group setting. We teach you how to find these motivated sellers, how to talk to them, how to negotiate it, how to fund, how to spend no money in marketing. You heard me right. Guys, click the like button, share this message, because no one's talking about this stuff, and I need your help to let the message to be heard, because the crash is coming. You hear the sirens, guys. You hear the sirens. It's coming. It's coming. Much love, and don't take no for an answer.